And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, and welcome to another episode of As the Market Turns. When we last left our heroes, stock indices, they were being pulled out of the depths of doom by either short covering or was it real buying. Stay tuned. Welcome to the market forecast. Today is Tuesday, January the 25th. I'm John. Thanks for trusting me with your time as always. Seeking context, risk management, and always thinking about patience. We've still got a lot of headline risks out there, ladies and gentlemen. There's a lot of uncertainties out there that we have to be aware of. As far as economic numbers are concerned, this morning the FOMC meeting begins. Echo. My apologies. Lots of things to do here. Sorry about that. TJ Hogue. All right. Well, I got that taken care of, so we're in good shape now. I apologize. Lots of buttons to push. Economic numbers. FOMC meeting begins today. Release of any information tomorrow at 1 p.m. I know there's a lot of biding time and posturing in these markets, waiting for that information to come out. 8 o'clock today, we have the Case-Shiller and the FHFA Home Price Index. Might be a little hint as to inflation in those numbers. And 9 o'clock Central, we have the consumer confidence numbers due out. So we've got a few things to look at as we get into the trading day today, and not to mention what's going on in the markets. The U.S. stocks are going to be opening lower, it looks like, after yesterday's. Most people are calling it a short squeeze. We are looking for information that may be contrary to what the broader opinion is. We did see a boost in open interest last night. We'll see that in the charts and when we get to that information. Earnings season really starts to hit stride today. We've got Johnson & Johnson. Let's see what else we've got here. Johnson & Johnson, Verizon, American Express, GE, Lockheed Martin. It's a long list. Archer Daniels Midland. Again, a long list. Johnson & Johnson, probably the biggest company to release the information this morning, had a pretty decent earnings per share, but missed in revenue. Verizon beat on both. American Express beat on revenue. Didn't beat on revenue, but did beat on earnings per share. GE, the same, a little bit less revenue, but still paying pretty well with earnings. And then this afternoon, after the close, we've got Microsoft and Texas Instruments. So we are just waiting for information. As usual, these markets are always hungry for information. Crude prices are a little bit lower, holding a digestive posture as we await the API and EIA data. API this afternoon at 3:30, and of course EIA tomorrow at its usual time, 9:30 Central. The markets are likely to be doing some posturing as traders hedge and position themselves for any unusual information that may come out tomorrow. With the uncertainty with the geopolitical situation, there may be some changes to what they've decided on before. We don't know. We're going to have to see how this plays out again. And we are, of course, make sure you hit the lucky like button. Share, comment, question, feedback, and heckling are always welcome, of course. Thanks for letting me know that I was double echoing there for you. I do apologize about that again. Make sure you subscribe to our YouTube channel so you can hear that echo once in a while. Looking at the VIX, up another 7% this morning, 33.2. Dollar index up again slightly, 96.21, and the 10-year yield off a little bit off the close yesterday, but pretty much remaining constant here at 1.76%. What else? For those of you that were getting into Top Step Foundation yesterday, there was, I guess, some sort of a hiccup in the Zoom email that lets you know that it's an hour until that starts. The link is always in that email, but that link doesn't change if you don't get that email today and you're looking forward to coaching to Trading Foundation. Just pull up an old email and use that same link to get in. I got my notification last night at 9:30 that Trading Foundation was starting in an hour, which of course was way late. So if you are going to be looking at that, you are thinking if you don't get the email, pull up one of the old emails, use that link to get in. The link does not change. All right. So got to say good morning to everyone as usual, and again, my apologies for the echo. Good morning, Zorain. You win the prize first in the room. Rick, thank you. I'm sure that text you sent me was to let me know that I had an echo going. Brian, good morning. Kevin, Andre, Jeff, Jim, Jimmy, Vince, Carpe Diem. Absolutely. Chris Lacey is saying good morning back to all of you, of course. Robert, Phil, Alessandro, good morning. Equanimous, good morning from Lombard, Antarctica. Yeah, it is cold out there. It's like 2 and feels like 15 below today. It's very cold in Chicago. Terry, and in Lombard, of course. Liam, Frederico, Drew, good morning. Robert, waiting to see if the buyers keep buying or leave the longs hanging. That is the soap opera that we are experiencing today as the market turns. What's going to happen to our heroes? Merrick, Bill, Shaw, good morning. George, Charles Brody, Ricardo, good morning. Devant, again, thank you for letting me know. Ophelia, good to see you. Happy you are here again. Glad to see you. George, Ryan, Shaw, Phil, everybody talking about the echo. Again, my apologize. Ryan, Jim, Juan, Alfred, good morning. Joe, Equanimous, DJ Hogan, the house. Yeah. Jeff, Allen, Ed Nelson, Liam, David, good vibes, of course. Wonderful. Chris, good. Good morning. Gonfer, Jeffrey, Allen, Jeff, Shaw, again, Jeffrey, Equanimous, all downhill from here, best part of the day. Ricardo, James, Liam, all good. Al-Haji, good morning. George, Drew, good morning. Phil, Bill, Juan, do we have to be flat for news today? No. Just tomorrow for FMC release. Ryan, what is the lock limit on 7%, meaning as we are near 50% change, we need to be closing out of trades. Live traders only, Ryan. Live traders only. Expediter. Juan, thank you for answering there. Matt, Andy, Three Lions, James, Kareem, Johnny, Equanimous, I'm selling bootlegs. Howdy, howdy, howdy. Yeah, we're going to get that in the auction process. Aren't we, Equanimous? Adam, howdy, howdy, good morning. And Toad Max, Toadman Extro. Haven't seen you for a while. Hope things are going well for you, of course. And as always, we appreciate you stopping by. And it is our goal to help in any way that we can. We are looking forward to your success. So let's jump in to the charts and let me get things set here. And we'll start with the E-mini S&Ps, go to Crude, watch the open, and then we'll see what happens. All right, here we go. And no echo. All right, here's the E-mini S&Ps. So we had a really deep dive yesterday, as our heroes were looking at the chasm of doom. Buyers came in. Did we get too short down here? Was this a face ripping move in the opposite direction, or is this going to end up being a low? It is presenting, as we talk about excess. This is a large tail. This is a lot of excess down here. Are the buyers going to are they going to remain present below this weekly kickoff level, or was this just a one-off blow-off event? We got too short. We ran. We had a big up move. Is this just one of those opposite moves that sometimes I warn about, but we don't see that often? I have a lot of folks say, when are we going to see one of those? We may have seen it yesterday. One of the things that we look at as far as information as to what happened yesterday, we added 24,000 in open interest. Now, the open interest has been increasing over time since the beginning of the year in the S&Ps as well as in crude oil. But a lot of that's been to the downside. Yesterday, we had a opposite move that may have brought in new buyers to the marketplace. If that's the case, they may protect, and they may protect relatively close to weekly kickoff level, because that's where we believe that longer, stronger traders may begin to adjust inventory. Did they adjust inventory yesterday is really the question. That open interest increase was continued accumulation, but again, on a range that continues the one-time framing activity. Today, we're inside that extended trading hour range. The weekly kickoff level may be support or may be pivotal. It was supportive overnight. We just took another look a little bit deeper through it here as we've come closer to the open. Here's the 30-minute chart. We also have a late spike. So here's yesterday. We opened, we accepted, at least for the time being, below weekly kickoff low. We had a pretty deep move to the downside as sellers backed off, buyers came in, whether they were short covering or new longs, yet to be evident. We have to wait and see if we do continue to protect this area down here, or even at weekly kickoff low. Value traders will be looking for acceptance in value from yesterday, which value high in the volume profiles. Value high is about 43.40. Value low about 42.58. But now we've got another situation. We've had some late spikes to the downside on the way down here. Yesterday's activity brought in a late spike to the upside. I'm calling the base of that late spike 43.08, approximately here. It seems a little off now. Thinking about the high of the initial balance, which is really just, well, let's see here. 43.40 might be closer to our base of the late spike, which is really right where we are now. So opening in the late spike or above indicates acceptance of higher pricing. Opening below the late spike marks rejection of higher pricing. So where this market opens is going to be relatively important. When we see what we've done in the overnight, we've accumulated some pretty decent overnight shorts here. These shorts are looking for continuation or help from regular trading hours traders to continue to push price lower. If that does not happen, and it may happen before we even open, if they start to get nervous, they'll pull price back up towards settlement where the accumulation of shorts began. So if that is the case, we may open in the late spike, which gives us the opportunity, or at least a probability, that we may be reaccepting prices at higher levels. We look to the base of the late spike or weekly kickoff low for opportunities. If that is the case, you are always thinking about where we can limit our risk. Where can we limit our risk? So weekly kickoff level might be a good level for us, and as well as the base of the late spike. If we come back up here and we come back in and we have some time spent inside value, that may mean that we are rejecting higher pricing and we may look for the market to head back to the downside. It would be my pleasure to be able to tell you all exactly what was going to happen today. Unfortunately, nobody has that power, and we have to trade what we see, and we have to be good risk managers. Remember stops. Remember, points of invalidation should be chosen technically, not just because I only want to lose $400 on this trade. Where does the market prove us wrong is the place where we want to put that stop. If you're in a place that looks obvious, think about getting in where you might put your stop. Think about that. Using our own fears and emotions to distinguish what the fears and emotions of our direct trader, I call them direct competitors, people in our time frame, finding out, when they are in fear can help us make our decisions. Let's take a quick look at the crude oil now. I know we've gone a little bit long here. So here's the daily. Upside digestion seems to be continuing. We've got pretty much a bull flag here if it ends up breaking out to the upside and continuing this move to the upside. Yesterday, we spanned, a pretty big range. We added 22,000 in open interest. There's energy coming into this market, if you'll pardon the pun. We've seen open interest continuing to pile in since the beginning of the year. That includes one rollover, but we still see open interest continuing to pile in. This is again energy in the market. We're looking for some sort of change. Right now, the price is relatively central in our area of channel here in our bull flag, if it ends up being that way. So I'm going to try and stay patient today. I believe our better opportunities are at these trend lines. I'm just going to start calling these the Dan channels, because Dan loves these. He waits for the market to test the high part or to test the low part because it helps him limit risk. Take a look at the 30-minute chart here. So here's our trend lines. We're in the middle. We've largely opened, I would have to say, bordering the high of value. So there's not a big change in the perception of value of crude oil at this time, which tells me I'm going to stay patient and wait for better trade locations as the day goes on. Where might those trade locations be? Perhaps at these trend lines. We may be starting to look at some day time frame information if we get some. I mean, if we get up to this trend line at some point during the day, we'll be pretty close to value low from a couple of days ago, kind of reaching for information there. But in the middle here, I don't think that we really have much to do. Take a look at the 1-minute chart here. Daniels. I like it, James. All right. So the opening range is the high of the session so far. We're looking at 13 ticks, not overly expensive to take this trade if you want. If we're looking at staying in value, the low of value is all the way down here, which is 82.59, 82.60. That gives us 100 points. If the opening range remains the high of the session, there's only one thing for it to do. It's hang or drive back into value. There's very little confidence that I'm seeing in this market off the open. We're just kind of hanging around here. So again, I'm suggesting trying to stay patient and looking for opportunities as the day goes on. Really just opening in range, close to value. I'll be looking for opportunities perhaps at the extremes of the Daniel. All right, Nasdaq. Nasdaq. The S&Ps have been holding largely above weekly kickoff high. Here's the S&Ps. Okay, supportive there. We look below it. We're back above it. Looks like we're going to open above it. Remember, if we open in the late spike, that could be indication of acceptance of higher pricing. The Nasdaq, however, it's a different story. It is a far different picture. Here's the base of the late spike. We're going to probably call it high of value from yesterday. We're opening in range and in value. We're opening below an important inflection level, which was resistant last night, whereas in the S&Ps it was supportive. It's almost like trying to wrangle kittens. You got two things going in different directions. Which one do you believe? Which one do you go for first? So we lost open interest yesterday in the Nasdaq. We didn't gain open interest on this pullback up there. We lost open interest. Is that indicating short covering? Did we find buyers down here or didn't we? There's a whole different picture. In the S&Ps, we added open interest. In the Nasdaq, we lost open interest, indicating maybe that is the fact that we got too short down there. So there's a lot of conflicting information that's going to make it more difficult. And a lot of, I don't know, I call it cognitive dissonance. We're seeing different information from related products. What do? Well, we're going to trade what we see. If we're trading the Nasdaq, we're going to trade the information we're seeing in the Nasdaq. If we're trading the S&P, our other hero, we're going to be trading information we're getting from the S&P. One of them is going to straighten out. Overnight, we have short overnight inventory, similar to what we have in the S&Ps. We know that both of our heroes had their closes at the highs after a good rip to the upside. The late spike is the late spike contrary to the bigger picture. Right now, it looks like it is. Doesn't look like it's necessarily going to be a factor in the Nasdaq. It looks like we're going to be opening outside of it, in range, in value, with some overnight inventory to the short side. No gaps, no runs, no hits, no errors, nobody left. Stay patient. Remember, it's FOMC. A lot of posturing probably going to be going on. It may mute ranges. It may make the markets a little bit slower until tomorrow at 1 p.m. Let's take a look at gold now. Okay. Gold is in rollover. It's switch day tomorrow. Watch volume. I'll be watching volume and see if I'm going to change to April contract tomorrow or if I'm going to do it on Thursday. I'll be watching volume. I'll let you know. We skip over March. You'll see that there's very little volume in March. It's one of those, I don't know, they call them bastard contracts where there's not a lot of activity in them. So we're going straight from Feb to April, perhaps tomorrow, maybe Thursday. Again, we'll be watching. We've got another little bull flag situation we've got going on here. We had one here that provided a decent upside opportunity last week. We're right at the upper extreme of this channel, if you will, this bull flag, this channel. Open interest, we increased 15,000 contracts on this push to the upside yesterday. Is that new buying? Is that going to Lacey? Come here, girl. Lacey, come here, girl. Sorry about that. Did we run into some new buying here? Are we going to see a breakout continuation to the upside? That open interest is indicative of buyers believing that could be true. Again, nothing would make me happier than to tell you exactly what's going to happen, but nobody can do that. We're going to watch this bull flag, and we're going to see if we have some opportunity in and around this channel, this top of this channel, if you will. Here's the 30-minute chart. So we've been dancing around it pretty much all night. We've been kind of peaking above it. We peaked above it now. We don't have any real overnight inventory with which to work with. I believe that the opening range has been left at the low of gold. So that tells me I have a hard time selling against an opening range when it remains the low. I believe that buyers are largely in control, but we're not seeing anything real confident, any big moves here off of this potential regular trading hour breakout above this trend line. Maybe that's maybe we move the trend line up here because we've got a little bit higher highs than this one in the overnight. That puts us right up against it. So the strategy is, as long as we remain in this channel, we fade the extremes of it. If it breaks out with some confidence, we go with breakouts from balance. Take a look now into the euro. And we'll look at the 10-year and the nat gas as well. So we've got at least a gap here we're looking on the 30-minute chart here. Here's the daily. We've got a gap. We've got a move down below weekly kickoff low. There's still some question as to whether we're going to find some support down at this level. We lost 5,200 in open interest yesterday. The open interest overall this year for the euro has been pretty much stagnant, really showing a lack of interest since the beginning of the year, even with this move, and especially yesterday, losing 5,200 in open interest. The weekly kickoff is our pivotal level. It is a potential change. Take a look at the 30-minute chart. Settlements all the way up here. We've got some considerable shorts in this market, but opening below the weekly kickoff level could bring resistance. We have a gap also. If we can't close the gap, we look for opportunities in the direction of the gap. Well, if we get an opportunity at weekly kickoff high, an important inflection level, that looks like a kind of a target-rich environment for me. If we can't close the gap and we've got a longer-term level between us and the gap close, looks like a pretty interesting spot for us. Yesterday, we had an opportunity for a long down against this weekly kickoff level. Again, didn't quite get into the zone deep enough for me, so we missed this opportunity to the upside. Now do we have an opportunity to the downside? Gap rules, weekly kickoff in play. Let's do a 10-year here. Indecision in the daily yesterday. We put up a doji, decent volume. We added 13,000 in open interest, which isn't huge for the 10-year. Volume maintains, of course. You can see that down here. We had a little higher volume, little indecision. We were talking about the idea that this brief upside auction might be getting a little bit tired yesterday morning on the forecast, and it seems to be presenting that way. We've got an inside extended trading hour range so far. Looking at the 30-minute chart, here's the 30 for the 10-year. So we've got settlement all the way up here. Our range from yesterday was very small. We've got settlement is 128.16 and a half 30 seconds, or 16 and a half. We've got a gap. We've got gaps all over the place. We've got all kinds of unfinished business down here to the downside. I'm going to be, looking to see if we don't close the gap relatively early. It's kind of gap rules. We've got overnight shorts. They're reconciling as we speak. So you're going to see if we can avoid closing the gap, which gives me the opportunity to limit risk. And let's take a look at the nat gas. Okay. We've got volume and open interest was pretty good yesterday. We know that this is a market that's in rollover, where expiration is coming soon. So we're starting to see all the volume come in here, and it actually, I think, did provide some pretty decent volume yesterday. We added 12,000 in open interest. 6,000 of those, I think, were new open interest. We lost about 6,000 in the Feb contract, we added about 12,000 in overall. So I'm looking at about a 6,000 contract increase in open interest on an up move. New buyers perhaps coming in. Take a look at the 30-minute chart. Okay, we've got the Daniel here. We've got, some pretty decent points of contact on the downside, couple of points of contact on the upside. When we're looking at this, this gives us opportunity, at the very least, to give us the opportunity to limit risk. So we've had a couple of looks overnight and in the, early, just before the open, a look at the bottom part of the Daniel here. And it's provided a decent, at least short time, fast opportunity for us. I'll continue to look for these extremes for opportunities as long as the channel or the Daniel holds true. So far, we've got the Daniel holding true here. So I'm looking to fade the extremes of this Daniel until something changes, until there's a breakout, some acceptance outside of the Daniel. And so we certainly have our tasks set out for us today. The markets are going to be, and always are, challenging. You're welcome, Fred. It's always a pleasure. I love your questions. We had some really good questions yesterday in group coaching, and again, group coaching is moved about a half an hour later because of foundations. Equanimous, I do have weekly kickoff levels for the 10-year. I don't really have that much love for them, but I do have those levels, and these are markets, and they are similar in a lot of ways. So the weekly kickoff levels for the 10-year, the high 129.10 and the low 127 even. I should point out those levels and the levels for the nat gas, because they don't get added to the weekly kickoff email. Trading Zoom links didn't. I know, I saw that, Roy. I saw that I got that email. I'm like, are you kidding? You're going to send it now? And I apologize about that. But remember, Roy, if you do have one of those old emails and that happens again today, the link is not going to change. Just you hit the link for the Zoom meeting on that email and you'll be in there. Pull up 1987 SB chart. Look how identical today's looks. I'll have to do that. Andrew, going down off the open rip. Well, we'll have to see. Daniels, I do like that. We're gonna have some fun with that with Dan. Although Dan's not going to be doing the recap this week, he's busy on another project, and but we'll have some fun with that. Mike, yeah, 604 points off the ES, sort of like 2008. Better be some kind of value, or we in big trouble. Yeah, and I wish I could tell everybody exactly what was going to happen. All right. You guys are way too kind. James, Fred, everybody. Equanimous, yeah, they did put the forecast into a playlist. I guess that's a good thing, huh? When you pass the combine, I'll buy you a beer. How's that, Equanimous? All right, folks, let's take our deep breath and be ready for the trading day today. I hope you guys do that. It's always so cleansing and calming. Make sure you stay grateful, patient, and creative in your trading today. Make sure you stay humble. Make sure you let the market tell you what it's going to do. There's opportunity here. Be patient. Wait for the right opportunities. Usually, they're they're going to come to you and they're going to mention themselves to you. The intuitions, as Dr. Menaker says, are not real loud. It's the impulses and the fear that's very loud. You wait for that right opportunity to knock you on the shoulder and say, "Hey, here it is." We'll have a great day. All right. So today we have at 11:30 we have the coach's playbook, and we've got foundation after that, and I'll see you for the recap after that. So if you get tired, if you get sick of me, I apologize. Let's have a great trading day, though. Let's get out there and profit. Trade well today. I'll be running down to the proverbial trading pit in a couple of minutes here. We'll see you there.